Well, good morning. It is May the 26th, Thursday morning, kind of overcast here in the Greensboro area. I guess it is everywhere. This is not Gib McCarron.
It is not, no.
This is E.J. O'Keefe. Gib is traveling the next 2 days. E.J.'s sitting in with me today. Liz will be with us tomorrow as we do the 98.1 show. You know, I was thinking about something overnight that I felt like you, as our clients and folks that watch this, would know. With today's technology, Gib and I, whenever we travel and go either on vacation or go on different trips, we always have the ability and carry the ability to interact with the office. We're really never out of touch, even on vacations, with the office. Through our cell phones, we have the means to read every one of the emails. Our office knows how to get in touch with us through the laptops. If we're in a secure place, we can conduct business as if we're sitting in the office. So even though a lot of things are taking us in different directions, both on a personal basis and a business basis, I wanted to assure you that when we travel, we are still doing business. We're still working in regards to overseeing your money, and we're in touch with one another. In fact, this morning at about 7:30, I already had talked to Gib. So I just pass that along. Also, to know that when we travel, we very rarely travel together. We intentionally travel separately, and when we take business trips that we have to go out of state and fly, we usually fly two different airlines for safety purposes and continuity in the company. So we have plans and we act those plans and just not counting on any bad things happening. Gib will be back next week. But just to let you know, next week I'm going to be traveling Thursday, Friday. EJ and Liz will be here with Gib. But we'll be working remotely and staying in touch. So just to pass that on to you. This week has been a week of continual focus on what the Fed is going to do. The FOMC meeting minutes came out. And
they did.
Tell us what it said.
The Cliff Notes version, essentially, that the economy is really strong, and the Fed recognizes that, which is a positive. The bad thing is inflation is high and continues to remain high, and the Fed realizes that, and they may have to look to be a bit more aggressive in their approach to combat where inflation is, being that it's a 40-year high.
Now, let me give you a little information that will help you, as I know you're scratching your head with what EJ just said, because when he said it to me, I scratched my head. But he's exactly right. The economy, as the Federal Reserve see it, is really strong. He used those words, really strong. And we get up every day, and you get up every day, and you see the things. We hear the shortage of the baby foods. You go to the shelves, you go to the gas pumps, and you know it's high. But when we say that, and when the Fed see it, they're looking at employment numbers. Mm-hmm. They're looking at returns of companies, productivity. They're looking at volatility. They're looking at supply chains. And even though there is concern in that, and I would tell you, even with a strong economy, those numbers and indicators are still strong. It is showing a slowing. The economy is slowing. And that's what the Fed is trying to do. The increase in the interest rate is that it is slowing. But when we say it's strong, the fundamentals underlying is still strong within the economy. So when we say that, that's what we mean. We this week began to make changes we've talked about. You will begin to see trades on a 1 year and 2 year fixed position in an investment grade bond that we have begun to buy with part of the cash that we've accumulated within the portfolio. We have now gotten to the place where we have gotten a good, reasonable return for 1 year to 2 years, and it has, in effect, for half of the cash approximately, given us the ability to stabilize and make that cash work hard for us. We're going to let things settle down. We're going to look at it again, and we're going to continue to monitor the portfolio. You were with folks in Virginia yesterday with Gibb.
Yeah, we had the great opportunity to go up to Galax yesterday.
I was in Cary, North Carolina. The common question we're all being asked is what?
What's going on in the market? When are gas prices going to go down? When is inflation going to subside?
And that is the $100,000 question. Quite frankly, we at HMC would not be surprised to see one more or another drop and then begin to see stabilization. There's another side of this that economists believe we might begin to see inflation roll over this summer. But that's the unknown that we're dealing with right now. But with that, what we are doing is we're looking for quality equities and positions that are on sale, that pay dividends, and we're giving ability to buy those with available cash. We're taking half of the cash and locking that down and getting a good return for 1 year and 2 year, and then we're leaving other cash on hand and we're reviewing the portfolio. So all in all, we feel good about where we are. We know what we're planning to do, and we're working and pushing ahead. If you have any questions, you should call us. Ask anything you would like to. We'd be glad to meet with you, Zoom with you, do a telephone call. But we are here, whether we're here physically or we're dealing with it while we're traveling, we are staying in touch. And we're doing it because it is your money.
And your money matters.
We'll see you next week.